Good afternoon, ladies and gentlemen. My name is Michalis. I'm one of the market analysts here at HFM, and I'd like to welcome everybody to another live analysis where we're going to be analyzing mainly the European indices. But because there's been so much developments within the market, generally speaking, because of economic data which has released and created a lot of volatility, we've of course have earnings data which will start to gain momentum, especially from tonight onwards. And of course, in addition to that, we definitely have to speak about the trade policy in America and, of course, globally, which is again influencing massively the financial trading markets. But like I said, the main focus of the day is, of course, going to be what is released by the ECB. Now, before we start to look at what actually has been before we start to look at what actually has been announced and the market's reaction and looking at signals, potential setup, what indications we are seeing from technical analysis, it's also important for everybody to know that, of course, as part of today's live analysis session, everybody has the option to ask as many questions as possible. Everybody should be aware that, of course, here at HFM, we have consistent, extremely fast support 24 hours a day. We have educational support as well, like today's session also. Now, today, like I said, we're mainly going to be looking at the ECB and the euro, but there's a lot of developments that we, of course, have to look at. We're going to look at all of these developments step by step, one by one, and we're going to be answering everybody's questions. Now, for at least 3 to 4 weeks, the projections for today was that the ECB was going to cut interest rates. Again, the ECB have actually been one of the most dovish members of the G7, which basically means they're the central bank, which has been cutting interest rates the most. Now, we were expecting a 25 basis point rate cut. The announcement has already been made. We have indeed, as analysts and economists like myself have predicted, there is a 25 basis point rate cut. So the rate cut, ladies and gentlemen, has been cut from 2.65% to actually 2.4%. So this is one of the reasons why we're seeing the decline in the euro against the US dollar today. If we're looking at the spike, ladies and gentlemen, the spike so far, and if we're looking at the price range of the candlestick, we can see we're kind of at the moment seeing a slight bias towards downward price movement, towards bearish price movement, because this is the range, but the range compared to where the price started off, we can definitely see the price movement downwards is significantly larger, and we can see we're hovering closer to that downward price movement. Of course, what we have been seeing over the past 2 to 3 hours is definitely something which is indicating price movement in favor of the US dollar. Today, so far, the US dollar has been the best performing currency, even though it hasn't necessarily seen significant increases. It has been the best performing currency. Now, I do actually have a question here. Which is the best performing currency? Which is the worst performing currency? So we, of course, are going to look at more in depth today's announcement in regards to the ECB, the European Central Bank. But of course, I'm more than happy to confirm and answer everybody's questions. In regards to the best performing currency, it depends what period we're referring to. If we're looking at 2025 so far, throughout most of the 4.5 months that we have seen in 2025, the best performing currency for most of that time has been the Japanese yen. For a very small period, it has been the euro, and for a very small period, it has been the Swiss franc. Actually, the Swiss franc has only been at the top of the table for approximately 2 weeks, again, mainly because of its safe haven currency status and also because of the trade policy and trade war escalating. So far this year, the best performing has been the Swiss franc at the moment, the euro has been the second best performing, and the Japanese yen has been the third best performing. Now, the difference between those three currencies in terms of performance is very similar. So they're definitely competing one with the other. Now we can see the euro is significantly declining. Most likely within a couple of minutes, it's no longer going to be the second best performing, but actually it will be the third best performing, because potentially the Japanese yen will start to improve. So, ladies and gentlemen, if we're looking though at today's price movement, the best performing currency is the New Zealand dollar and US dollar. The worst performing currency is actually all safe haven currencies. So, for example, we're looking at the Swiss franc, the Japanese yen. The euro is not a safe haven currency, but at the moment it is, ladies and gentlemen, being used as a currency very similar to safe havens, because they're looking at it as a way to mitigate the risk and spread the risk and lower the exposure towards the US dollar. A very good way to do so is to increase your exposure to the euro, which is one of the strongest currencies in terms of currency reserves. Now, we're definitely seeing the price declining. I said, 5 minutes ago that there is a bearish bias. There has been a bearish bias throughout the whole of the day. Since the announcement was made, again, I said we're looking at a bearish bias. And indeed, over the past 5 minutes, we are seeing the price decline. So our analysis so far, ladies and gentlemen, is definitely something which is accurate so far. Now, the decline in interest rates, the influence today is going to be based on three factors. Okay. Now, those three factors will either all indicate downward price movement, or it will indicate will result in conflicting indications. The interest rate has declined, so it can't be necessarily something positive as an announcement itself. Okay, so now we're going to align our interest, and the spotlight's going to turn towards the second factor and third factor, because we already know the European Central Bank has cut interest rates again. And like I said, it's been most probably the most dovish central bank out of the G7. So that's definitely something which is negative for the euro. Now, ladies and gentlemen, in regards to the second factor, we have to take into consideration the press conference. The press conference is going to take place in approximately 30 to 45 minutes. Okay, so keep that in mind as well. That's going to create a lot of volatility. Most likely, that can create more volatility than the actual announcement itself. The announcement itself, it's created a volatility range so far of almost 0.30. So a decent amount of volatility, moderate volatility, but not necessarily something substantial. Okay, whereas the press conference potentially may do that. Now, in regards to the press conference, there's two things we're hoping to get further light on. The first thing is, does the European Central Bank expect the ECB to lower its main financing rate again this year, and by how much? Now, if the European Central Bank and the President, Christine Lagarde, is going to sound extremely dovish again, and she's going to say, we've cut quite a lot. There's reasons why we are cutting. We do need to continue cutting as well. Then, of course, that's something which is extremely dovish, and there is a strong possibility that potentially the price of the euro may continue to decline. If we're going to get an indication that we've cut, but we believe now's the time to take a pause because we've cut consecutively for many, many months, then, of course, the euro USD can very quickly rebound back upwards, again with quite a lot of volatility. The last thing, and the third factor that everybody's going to, of course, be focusing on is the trade policy and the ECB's view on the trade policy. If they believe there's going to be negotiations, if they believe the negotiations are going to be fruitful, and going to have a positive outcome, that definitely will create a lot of volatility. Now, anything positive in terms of negotiations, if they come out, for example, and say, we will negotiate, we are starting to speak about negotiating, I definitely believe there's going to be a trade deal with the US. If everything is very positive like so, actually that may support the US dollar, which has taken a hit because of the trade policy. Whereas if it sounds very negative, then actually investors may further look to decrease exposure into the US dollar and increase exposure onto other currencies, which of course would definitely be the euro, the Swiss franc, and the Japanese yen. Those three currencies are mainly benefiting from this at the moment, ladies and gentlemen. Now, if we're going to switch over to a 2-hour time frame, we're going to start to look at the euro against the US dollar. We're also going to look at the euro against Japanese yen, euro, Swiss franc. We're going to look at the DAX. We're going to look at European indices as well. And of course, we will look at US indices also, because we have to take into consideration that we're in the middle of earnings season. For example, today we will have the quarterly earnings reports from Visa, from Netflix, from the Bank of America, a lot of massive companies which hold quite a high weight, ladies and gentlemen, which basically means they have a large influence over the Nasdaq, over the Dow Jones, over the S&P 500. I will confirm to you in terms of actual figures how much influence they have. But before we start looking at that, let's start looking at the euro against the US dollar. Now, the euro against the US dollar, the first thing everybody should be aware of is that there definitely is there a lot of resistance. We're not at the resistance point. We're quite far away from the resistance point, but there definitely is there resistance, ladies and gentlemen. In addition to that, well, if we're looking at this pattern here, we're looking at potentially there being a triple top. Now, that's an indication of strong resistance, the price potentially declining. In addition to that, we're also seeing that each price movement is lower. So, for example, if we look at, for example, this low, then it's lower again. If we're looking at actually, instead of that high, we're looking at this high and this high, again, we're still seeing a downward tilt. Now, there is something which is what is known as a wave theory. One of the most famous wave theories is actually the Wolf wave theory. Now, the Wolf wave theory basically tells us that we should focus, if we're going to see a retracement and correction, the first potential target that traders should look at is actually looking at the highs, okay, as it trades downwards, to actually be flipped onto the support level. Now, if it's going to be flipped onto the support level, you can see it actually brings the target, ladies and gentlemen, of downward price movement to here. Now, this is potentially a target which has a lot of indications. Why has it got indications, ladies and gentlemen? Because if that target, the Wolf wave theory, is indeed correct, sometimes it's correct, sometimes it's not. You know, people have mixed views on wave theories, but there's a reason, of course, why there exists. So, for example, if we're looking at this, ladies and gentlemen, this potential target here, then we can see it's also a support level for multiple reasons. We can see it's found support on multiple occasions here in this area. It's found significant support here. You can see as it's declined to that level, we had 1, 2, 3, 4, 5, 6, 7 hours. So that's 14 hours of the price increasing upwards without seeing any retracement at all. So that's an indication of a very strong support level again. It's also definitely in line with our trend line. The trend line is a 75 bar exponential moving average. So we can see it's in line with that as well. So there's quite a lot of reasons here, ladies and gentlemen, why if we're going to see the price decline, that's potentially a target we may take into consideration. Now, let's say something is extremely negative for the euro. So, for example, if the president of the European Central Bank comes out and says, you know, we believe inflation will not rise, we believe the gross domestic product of the Eurozone is going to take a hit because of the trade policy, and we will have to cut interest rates again on multiple occasions in 2025. You know, if they come out and say something extremely dovish like so, and even something that simultaneously may support the US dollar. So, for example, if they also say that they do believe they'll come to a trade agreement with the US, you know, that's something that can really push the price downward. So even if we're going to see something that may create a longer downward trend, Potentially, we don't know if that's the case yet. That potentially is just a first target, all right? And it's based on the wolf wave theory. We can see on multiple occasions, when the price has gone very far away from the 75 bar exponential moving average here, and also the 100 bar simple moving average, that trading cloud here. That's how it's known as. It's known as either the inner regression channel or the trading cloud. You can see as it retraces to that level, it tends to find support. So, we increased all the way up to here, declined, found support. Up, declined, up, declined, up, declined. And it's gone all the way up again. So you can see it's a very strong psychological level for traders. So the question is, if we're going to see downward price movement, that potentially is an indication there to indicate, yes, indeed, we will see downward price movement. At the moment, we're currently seeing convergence here. So we are seeing indications that indeed there is a downward price movement indeed. So that's something we definitely have to watch out for. But what we don't want to necessarily do is, somebody here says, can we also look at the euro against the Australian dollar? Of course I can. Because you've requested it, I actually will look at that next. So what we do want to be cautious about, and by the way, there's been some news about the Australian dollar from the Reserve Bank of Australia, and also the employment sector in Australia as well. That's created a lot of volatility. I'll look at that. I'll speak about that also when we're going to look at when we're going to look at the euro against the Australian dollar. Anyway, when we speculate in downward price movement, of course, we want to speculate with the downward momentum. Now, we are starting to see some positive indications in regards to the euro against the US dollar. Here, ladies and gentlemen, we've got the 200 bar simple moving average. Ideally, if the price is below, we're keeping a bearish bias. If the price is above, we're keeping a bullish bias. It's not, of course, always accurate, but what you can see is that it really helps us in regards to the bias. So, for example, here we drop below, there's a lot of downward price movement. When we drop above, so for example, here we are attempting to remain above, we can definitely see a lot of upward price movement. So you can see it gives us a very strong bias. For example, again here, very strong bias. So we attempted to break below, but we have to, in order to be successful, to trade with the momentum of the downward price movement, because we're not building a portfolio. We don't care if it's going to move in our favor in 3 months' time or in 6 months' time. That's useless to us. We need it to instantly start to move in our favor, ladies and gentlemen. Of course, it depends on our methodology and our approach. If we're more swing-term traders, then we can allow for more flexibility, more volatility, more movement. But nonetheless, it needs to be relatively quick in our favor. So what we can do is a few things. Number one, we can look at the breakout. A breakout is known as an indication that the price will basically continue to decline. So if, for example, it's going to break below that level, for example, then it's an indication it will continue to decline. Now, the issue with the breakout level is that it's very close to the support level, and we have to wait for quite a lot of price movement in order to start seeing a sell signal materialize to be able to start taking advantage of it. So what do a lot of traders do? Instead of looking at the breakout level, what they'll do is they'll measure the volatility between the swing low and also the swing high. The swing high at the moment is continuously changing. At the moment is there. And basically, instead of trading at the breakouts, they use the 0.65 level as an indication of, if we're going to decline below that, that's indications of downward price movement. So by the looks of it, we're trying to gain downward momentum. Let's see if we do actually gain enough downward momentum. If we do gain enough downward momentum, then we're stabilizing the price below the support level here. We're below the 200 bar simple moving average. We've regained 65% momentum. We're trying to break through it. We're trying here, ladies and gentlemen, to break through that level. But let's say we do break through the level, then we can start to look at the target we looked at here, ladies and gentlemen. Again, that target is massively based on the wolf wave theory, also the moving average as well. Let me slightly increase there. So also in regards to the moving average that we can see here, and also the support level that we can see here. We're waiting for those levels to come in line, which is approximately down to that price there. So that, of course, is something for us to take into consideration in regards to the euro against the US dollar. And we can see we just now, ladies and gentlemen, broke below it. Let's see if we're going to break below it again. Let's see. Seen up and down volatility. Let's see if we're going to break below it. We're going to keep an eye on it. Let's come back to it, ladies and gentlemen. We're going to keep an eye on it, of course. Now, somebody said if we can look at the euro against the US dollar. Of course, I'll look at the euro. Sorry, somebody says we can look at the euro against the Australian dollar. Of course, I can. Keep in mind, ladies and gentlemen, there's many accounts that you can trade with on our platform. We have a zero spread account. We have an account with no overnight fees for a limited time for approximately, I believe, it's 2 to 3 weeks. You can trade with no overnight fees at all, which is amazing for traders. Now, here we're looking at mainly downward price movement. Probably stronger downward price movement than we're actually seeing in regards to the euro against the US dollar. We're nowhere near the resistant level. I would say, though, we're not necessarily close to the support level. So there's plenty of time and space there to start speculating downward price movement. Here, we're seeing more in-line signals, okay? Because we're trading below our trend line, which is here, the 75 bar exponential moving average. On this chart, actually, the 100 bar simple moving average is acting more accurately. We're definitely below that as well. We're below the neutral level on the RSI. The RSI is currently trading at 43, so that's definitely indicating downward price movement. We're not at a support level. We've got plenty of time until we get to that support level. So there is indications here also that the euro may potentially decline. Let's get the euro against Australian dollar. There we go. And we can definitely see stronger downward volatility, ladies and gentlemen. Now, in regards to today's price movement, which is the best performing currency, the Australian dollar is currently more or less unchanged. So it's neither seen extremely strong price movement or negative price movement. It's at the neutral level, seen minus 0.02. So that's pretty much nothing, ladies and gentlemen. Whereas if you're looking at the euro, we're currently seeing on the euro minus 0.40 if we're looking at the euro index. Now, if we are going to be trading the euro, ladies and gentlemen, there's a lot of benefits to also monitoring the euro index, which basically gives us a fairer and stronger valuation of the euro. Because if we're speculating the euro's increasing in value, ideally we also want the euro index to be increasing in value. If we're speculating the euro's decreasing in value, we also want ideally the euro index to also be decreasing in value. Somebody says, what's the euro index? We just mentioned it. So it's an index which gives you a stronger and fairer valuation of the euro. But in terms of what exactly it is, in terms of the price, how the price of the index is derived, it's derived by looking at 4 currencies. It gives you the value of the euro against the US dollar, the Swiss franc, the pound, and the Japanese yen. Weight equally against all 4. So it's got the same influence against all currencies, and basically is used to give us a stronger indication on the euro. Now, we are definitely seeing retracement here. So we need to keep an eye on this retracement. Let's zoom in slightly. We can do the exact same thing. We can measure, for example, between the high and the low, ladies and gentlemen. The high and the low is there. And we've got 65% basically here, ladies and gentlemen. So if it's going to drop below there, then we have an indication of downward price movement. Now, let's say we get a larger retracement. A larger retracement is not an issue, especially if we're going to still not get a large enough retracement to increase above the previous high, the previous retracement high. Now, if we increase above the previous retracement high, it doesn't mean downward trend cannot continue. It just means we need to be slightly more cautious. As long as it's remaining below the 200 bar simple moving average, that's the main thing. But again, even if we're going to see a larger retracement, ideally we don't want it to go above our previous high. previous highs here, ladies and gentlemen. So let's say we get a retracement all the way up to here. It just means that we're going to enter on an earlier entry, for example, here, ladies and gentlemen. But at the moment, we don't have a higher retracement so far. So we're still looking at a signal materializing if it declines lower than the 65 level here. That's a big if. Also keep in mind that volatility is going to start taking place in approximately, ladies and gentlemen, 5 minutes. Because of course we will get the announcement and the press conference from the European Central Bank. Based on that press conference, of course, it will create a lot of volatility. By the looks of it, the momentum is trying to push the price slightly higher in favor of the euro. It's just very simply just a correction. Whenever we get announcements, we always get corrections and retracements like this. Again, if it's going to continue to increase, we just adjust our levels there. Now let's look at the euro against the Japanese yen and also the euro against the British pound. Euro against Japanese yen, a lot of sideways price movements. So what I will say is you have to be cautious in regards to that. Why is it moving sideways? Guys, it's moving sideways because they're two competing currencies. We're looking at the second and the third best performing currencies of 2025 with not much of a difference between them. Let me refresh my chart just to show you what's the difference between them. So a few minutes ago, we said the euro was the second best performing. At the moment, the Japanese yen is the second best performing. And the Japanese yen index is increased by 9.07%. The euro has increased by 9.04%. So what I will say is it definitely for a beginner trader will be slightly more difficult to analyze the euro against Japanese yen. But what you can do, ladies and gentlemen, is, for example, if I go to a different time frame, I'm actually going to go on to a 30-minute time frame. Now, if I look at this 30-minute time frame, okay, we can definitely see we've seen a sideways price movement. How many? Let's slightly increase larger. There we go. I would say the main range that we're looking at is the range between here and also maybe here. That's the main range that we're looking at, ladies and gentlemen. But if we're looking at all candlesticks on our chart, if we're looking at the candlesticks, we've got 400, above 400 candlesticks. So if we do 400, okay, it gives us an average price of the range. This is the average price of the range. It's a shame that we're very close to the average price, because that average price here is extremely important, because every time when you're looking at sideways price movement and a price range, which is basically known as range-bound trading conditions, then anytime we see a very large impulse wave and the price move far away from that mean, the exchange rate's mean, the average basically, then a lot of the time it will hit it again. So for example, you can see I've taken the average of the index over the range bound conditions, and you can see we saw an impulse wave here, it hit that mean again. We saw an impulse wave here in an even bigger one, it hit the average again. Even when we're seeing a larger, let's zoom out, there we go. Even if we're seeing larger, longer standing impulse waves. So here, for example, we saw multiple upwards impulse waves. You can see eventually it just declined back to that average price again. Now, that's definitely something which is not, should we say, a technique and strategy that you would do for a trending market. If you try to do that, for example, with the Nasdaq, in 2022, 2023, 2024, you definitely wouldn't have been successful. It's only used for range-bound trading conditions. Anyway, that's the euro against the US dollar. At the moment, if we go to a 2-hour time frame, we're at a neutral signal, ladies and gentlemen. Of course, though, main benefit at the moment is the Japanese yen, not just against the euro, but across the board, the euro is seeing a decline at the moment. So, of course, that's the main bias that we're seeing at the moment. If we go to 3-minute time frame, we can definitely see downward price movement again. If we do see the price increase back to our 200 bar simple moving average, then we can take into consideration it rebounding back downwards. If we're going to see something extremely dovish from the European Central Bank in the next few minutes. Now let's look at the euro against the British pound, because we had one person ask if we can look at the euro against the British pound. Euro against the British pound. There we go. 2-hour time frame. Let's go to today's price. Here we got a slight bearish bias. This again, I would say, is a mixed price movement because the latest swing is an upward swing, could very easily just regain momentum, and it forms the traditional trend type. Also, could be potentially a head and shoulder pattern, which is negative as well. Also, latest low was more or less the same actually, but we're below the two trend lines. We're below on the RSI as well. I would say that's a mixed signal. So the clearest signal we're seeing at the moment is actually on the euro against the US dollar. Also keep in mind that that has the lowest spread, which of course is extremely important, especially for scalpers. If we're going to go to smaller time frame, without a doubt, of course, it would be in favor of the British pound. Let's go back to the euro against USD. We actually retraced. Look at this, ladies and gentlemen. We said retracing back up to that level. Okay, that's the exact level we spoke about retracing to. We can see retraced to it. We just said we didn't want it to increase above this level. So that's really interesting that we've seen actually that it's increased to the previous level we were speaking about. So again, if it increases there, then if it starts to regain momentum to the 65 level here and below, then that regains and we see sell signals materialize again. Somebody says, what's the best performing currency now, today? Before it was the US dollar. Now it's the New Zealand dollar now it's the New Zealand dollar. Second best is the US dollar. So you can also look, guys, against the euro, against the New Zealand dollar, which is the best performing. There we go. Look at that downward price movement. That is an amazing downward price movement, guys. That is a straight line. So that's definitely something we can take into consideration. The only concern there, my fellow traders, is, we're starting to get close to that support level. Whereas on the other assets, we weren't close to support level. Nonetheless, that momentum is very clear downward momentum. And we are, good sign, we're seeing a low here, a low here, a low here. So we're seeing lower lows, we're seeing lower highs as well. So high, high, and a lower high again. A lot of indications indicating downward price movement there, ladies and gentlemen. And on a 3-minute time frame, very clear signal of downward price movement. What you can potentially do if you're scared about the price being oversold, is you can place a sell trade potentially, a small sell trade, and if it increases in value, for example, goes back to, let's say, our trend 200 bar sentiment line here, then potentially place another sell trade, maybe a slightly larger sell trade. The only thing there, ladies and gentlemen, you have to be cautious not to fall into the trap of looking at, for example, the martingale strategy. So that's in regards to the euro against the US dollar. Now, there's a couple of other things that we have spoken about in our article today. One of the things was the euro. One of the things was US oil. One of the things we mentioned was there was a lot of things that indicated potential upward price movement in regards to the oil prices. We had positive data yesterday from the US. We had positive data this week from China. Keep in mind the US and China is the largest importers of oil. So we had some positive data there. Retail sales was extremely high. The gross domestic product was extremely high as well. We had also positive data and news from the supply side. we definitely had sanctions on Iran. We also had a cut in output from Iraq, from Kazakhstan, and some other OPEC Plus members as well. So there was some factors indicating that actually oil may potentially increase in value. The only concern though is it's definitely at a resistant level. We said that as well in the article, and we did say that if we really get hawkish central banks across the board, because yesterday's comments from the central bank in America, the Federal Reserve, was also very hawkish as well. If we do get that, and we get trade tensions escalating again, then that resistant level is definitely going to flip back into play. So we said both positives and negatives in today's morning article. So that's in regards to oil. The bias at the moment is a slight bullish bias, but with concern in regards to certain fundamentals and developments and the resistant level. The other thing we wanted to definitely speak about is the Nasdaq. The Nasdaq here is in neutral level. We're seeing higher highs. We're seeing lower lows as well. A big factor, ladies and gentlemen, is going to be the earnings data from Netflix. So I'll share a different screen with you, ladies and gentlemen. A good thing is all of the major stocks here are in green in the pre-hours trading session. All of them you can see here. This shows the percentage of influence, basically the weight which the individual stock has. Now, the 8th most influential, well, it's actually the 9th most influential because, of course, you got Alphabet, which has 2 stocks, okay? The 8th most influential, ladies and gentlemen, is Netflix, okay, because it holds a weight of over 3%. It's actually one of the best performing stocks over the past year. If we look at Netflix stocks over the past 12 months, increased by 56%. And that's even taken into consideration that we've had a stock market crash in April. 56%, and the stock market crash is quite well. Okay, that's quite good. Up today by 1.5%. So we can definitely see shareholders believe the quarterly earnings report is going to do well. The previous quarterly earnings reports, ladies and gentlemen, over the past 4 quarters have been also very positive as well. So we can see the earnings per share previously beat expectations. Before that, it beat expectations again, March of last year, okay, that had a massive upward price movement. Revenue was beat by 1%. Earnings beat expectations by more than 16%. So they've been having an amazing 12 months, Netflix. This potentially is why we're seeing the stock increase by 1.59% in pre-hours trading. In terms of capital, that's $15, just over $15. So if that comes in positive, that's definitely a positive factor for the Nasdaq. Now, if you look at the S&P 500 components, there's also other companies which are going to components. There we go. There are also other companies which are going to have an influence. Now, if we're looking at Netflix for the S&P 500 is the 18th most influential stock, but we also have Visa releasing their earnings report today as well. That they hold a weight of 1.28, and we also have Bank of America, which Bank of America, let's find Bank of America. For some reason, there we go. Bank of America. They also released their earnings data as well. That is 26th most influential stock. But if we're looking at 0.55%, Netflix is 90%, so that's 1.40 on average. And then you've got Visa, which is 1.28, so that's 2.40, 2.68, let's say 2.70. That's quite a lot of influence, ladies and gentlemen. Those 3 stocks have more weight than Netflix. More weight than Meta platforms, for example. So that can create a lot of volatility, ladies and gentlemen. What we do want to see, though, if we want to see if we want to see upward price movement on the Nasdaq, we ideally want to see at least 70% of these stocks maintain a green throughout the day. Okay, at least 70%. We definitely want to see Netflix stocks significantly beat earnings and revenue expectations. And we also would like to see, you can see here at the very bottom, VIX index, which is basically a indication of risk. Okay, we want that to remain low. At the moment, that's 3% down. We need it to be as low as possible. Ideally, we want that to go even lower, ladies and gentlemen. And we also want to see a positive tone from Christine Lagarde in regards to trade policy. Now, if we go to a 3-minute time frame, we actually saw some volatility here during the European announcement. We can see a couple of breakout levels. We've got a breakout level here. We have a breakout level up here as well. People can take a breakout level here indication as well, but that's quite close. What people can do is they can even, if they're, for example, normally opening 0.03 lots, they can look to mitigate the risk and spread the risk across different entries. So for example, instead of opening 0.03, they can open 0.01 here, 0.01 here, 0.01 here. So you're spreading the risk across multiple entry levels, especially people that suffer with difficulty with timing, with leverage, with volatility. That's something they can potentially do. But we definitely need to see momentum be regained. And ideally, we want to see, like I said, the VIX lower. We want to see those NASDAQ components remain green, at least 70%. And we do want to see Visa and Netflix beat earnings and revenue expectations. Somebody says, how has Visa performed? Let's go to Visa stocks. Over the past 12 months, they've performed extremely well as well. You can see the beat earnings expectations on each occasion. Look at the stock. The stock most likely isn't performing as well as Netflix. There we go. So we can see it's up 21%, and we can see it's seen a much greater decline in the stock market crash. So like I said, it's probably not, because it's more directly negatively influenced by a recession. Now, most economists are 50-50 if the US is going to see a recession. That will harder hit Visa because it has income related to transactions. So, ladies and gentlemen, we've looked at the S&P 500, we've looked at the NASDAQ, we've looked at oil, we've looked at almost all currencies for the euro against the US dollar. We've seen the euro decline again. It went up to where we said it was going to go up to. We said it will go up to here. It did go up to there, declined thereafter. Seeing some upward price movement again. It's all going to be dependent on what President Christine Lagarde is going to say. So, ladies and gentlemen, that's it for today. Hopefully you found today's trading session educational. Keep in mind that we have a lot of free educational material for everybody that you get free access to just by registering. And keep in mind, to register, it takes no more than 5 minutes. We've got a very user-friendly mobile app and web-based website as well. We have a lot of educational material to help our beginner traders, including signals, including copy trading, including webinars, live webinars, trading sessions, analysis sessions, articles every single day as well. There's a lot that we provide, and you can always take advantage of our no overnight fee account, zero swaps account, and zero spread account as well. So that's it for today, guys. Enjoy the rest of your day. I'll leave it here because we've been speaking for 45 minutes now. Hopefully you found it educational. Keep in mind, we're going to see a lot of volatility based on what the president is about to say in the press conference now. Okay, so far, the rate cut has had mainly downward momentum for the euro, which is understandable. But now it's all about what Christine Lagarde is going to say. And in regards to indices such as the S&P 500 and the NASDAQ, the main thing is going to be if Christine Lagarde is going to say something negative in regards to trade policy and trade escalations, but also massively will be Netflix earnings and Visa earnings. They both have beat expectations in the past 12 months. Let's see if they can do that again. That's it for now. Hopefully found it informative today. Enjoy the rest of your day. For those of you who are celebrating Easter, have a lovely Easter and have a lovely break. In the meantime, I'll see you on our next webinar.